Good evening. It is Monday, the 12th of February, 2007. This is Brian Shannon speaking from Alpha Trends. Let's go ahead and take a look at some stocks we're trading on Tuesday. I've got shares of Brooks Automation on the screen right now, symbol BRKS. And this looks probably pretty familiar to you. It's a recent breakout on heavy volume. And the stock has pulled back for 2 days on diminishing volume, but we saw a resurgence in the buying interest today. So looks like this resistance level at about 1530 is acting as a pretty decent little level of support in the short term. Looking at a weekly time frame, it looks like the stock probably has the ability to make it up towards that $17 level or so. Our target's not going to be quite as aggressive, but that's just something to keep in mind. What we're looking for here is a slight pullback. You can see how it had, let's take a look at a 2-minute time frame. You can see how it had a little rally here late in the day. I'd like to see the stock pull back to 15.5. Actually, let's call it 15.55. Let's see the stock pull back to 15.55, buy it above 15.65. We then put our stop below this the morning low right in here. So we put our stop at about $15.38, and that would give us about 22 cents of risk. And our upward target in this case is going to be about $16.50. I think right back up to close to where it was there. And that will give us a price objective of 85 cents for a risk of just 22 cents. Next up, we're going to take a look at another very similar looking stock. That is another company that broke out past resistance on heavy volume, and we've seen this volume really diminish as it pulls back in here, and we're starting to see that range narrow a little bit. So there's not as much volatility, and that tells me that the buyers and sellers are kind of locking horns in here. Buyers may be starting to gain an upper edge, the advantage, whatever you want to call it. But I'd like to see some strength in the stock before buying it. So I think taking out today's high, buying the stock above $19.28 makes a higher high that would add to these higher lows in here. We've also got this 5-day moving average looking like it's acting as support. So I think that if we buy it above $19.28, we're going to look for a move up to 20.5. Not even all the way up there, just up towards this gap area though. We'll make our target conservative here, to $20.50. That would give us though $1.22 of potential upside for a risk in this case of just about 29 cents if we're to set that stop just below that $19 level. So looking like another good risk-reward setup. Amazon.com, AMZN. The daily chart's a little bit of a mess in here, but we have seen some volume come in on these up moves right here as it challenged that 50-day moving average. Then we saw the buyers come back in over here with, again, a resurgence of that volume. So the volume came in, and now the stock is holding above that 50-day moving average, which is flattening out. Now, we're only looking for a short-term trade in here. I don't think it's the best-looking setup, but it does look good to me. And I think that what we want to do is buy this one on strength as well, above $39 a share, where you can see it had some late-day, I wouldn't even call it late-day resistance, but we just saw a little bit of pause to what looked like this higher high in here. So we've got this higher low. Now we've seen this higher high. Let's see it take this $39 level out before we purchase it. We could set a stop just below here, set that stop at $38.62. That's just 38 cents of risk, and I think they're running up to the $40 strike price. So that's going to be our target, $1 away for 38 cents of risk. Now, I'm kind of cautious on the market overall, but I was really only able to find one decent-looking short setup, and that's in shares of Harley-Davidson, symbol HOG. You can see that the stock has had numerous tests of this support in here near the $68 level. So the more time support is tested, the more likely it is to fail to hold. We've also got further evidence of selling by or sellers getting more aggressive because we're seeing the stock make these lower highs. So they're not waiting for a bounce to 75 before they get rid of a lot of shares and take control. They're not waiting for a rally to 73 or even 70. Looks like the pressure is building on the downside, and this thing looks ready to break. You could call it a descending triangle if you want, and look for a big price target based on the height of this pattern. That's not the objective here for this trade that we're going to be talking about. What we're going to be looking for is a short on weakness below $68.15. So right below this level here, below 68.15, that's where I'd like to sell the stock short. We could set our stop up at about $16.48. So that would give us 33 cents of risk. And I think the stock has the ability to drop down towards about the $67 level. So that would give us a price objective that would be $1.15 away for just 33 cents of risk in shares of HOG.